So let us begin with the core consultant's analysis of the ferrochrome market. Before we can understand the ferrochrome industry, we need to take time to consider the health of the global economy. The fortunes of ferrochrome are dependent on the demand for stainless steel intensive goods. The consumption of these goods increases amid strong economic growth, while in recessionary times, demand declines. The recent financial crisis is an extreme example of the dependency of the chrome industry. In 2009, the average price of ferrochrome dipped by 60% year on year during that recession. We therefore thought it was appropriate to divide this presentation into four parts. Firstly, to consider the economic outlook for America, Asia and Europe, which we will use as a foundation to formulate our view on the chrome ore market. Thereafter, we will consider recent developments and trends in the stainless steel and ferrochrome industry, and finally end off with our longer-term view of ferrochrome. America's response to the financial crisis has been a coordination of expansionary monetary and fiscal policies, including reduced interest rates, which are now at zero, supplemented by other measures such as stimulus packages and quantitative easing round 1 and 2. This was then matched by the Obama government reducing taxes in an effort to stimulate the economy through fiscal means. These measures indeed seem to have pulled the US back from a recession, and last year the US economy enjoyed 3% growth, and this year 2.5% growth is expected. This recovery has mainly been concentrated in the goods-producing sectors as opposed to services, as evidenced by the high US Purchases Managers Index. An index of 52 was experienced last quarter. A PMI index in excess of 42 generally means that the economy is expanding. Therefore, despite lower PMI numbers during the last part of last year and similar this quarter, the US economy has been improving consistently since the second half of 2009. Despite strong PMI numbers, household consumption has yet to regain any real strength as job scarcity and unemployment persists. Over the last quarter, the unemployment rate remained unchanged at 9.5%, which is unacceptable in a populist democracy. While there have been some inroads since last year, when the unemployment rate stood at 10.6%, at present, growth in the US employment numbers fall. Sorry, there are seats in the front, if you'd like to come. Despite this trepidation around employment on the 8th of June, Ben Bernanke told the market that there was no indication that another stimulus package would be needed. A tightening of liquidity, coupled with inadequate employment numbers and rising oil prices, should further erode US disposable income and spending over the second half of the year. In the context of the ferrochrome market, America accounts for around 10% of stainless steel consumption, and hence a decline in consumer confidence and spending would have an adverse effect on consumption of stainless steel, which would have a knock-on effect into lower demand for ferrochrome. We calculate that a 10% reduction in US stainless steel consumption would result in a 4% decline in ferrochrome demand. Last year, China usurped Japan as the world's second largest economy, and the IMF predicts that it will usurp America as the largest economy as early as 2016. This milestone confirms a shifting balance of power towards China. While we acknowledge that this is indeed a stunning economic accomplishment and well-deserved accolade following 3 decades of economic revival, when it comes to China, we continue to exercise caution. We warn that China is facing increasing wage disparities, which could lead to social unrest. Further, the economy continues to depend on fiscal stimulus measures and government intervention for sustained growth. With its populous commodity and double-digit growth, it is not surprising that China would overtake Japan, though on a per capita basis, China is found wanting. China's economic growth has been aided by government's $586 billion stimulus plan, which provided unprecedented economic infrastructure projects, as well as expansionary monetary policy that extended credits to its trading partners, US and Japan, so as to ensure continued economic trade. Government interventions will continue to encourage demand for stainless steel goods. The 5-year plan will target the construction of 36 million affordable homes. Additionally, the government continues to boost purchases of white and black stainless steel intensive goods, which in turn encourage demand for ferrochrome and pertinent raw materials. Briefly, Japan's damages from the tsunami is estimated at 5.6 trillion yen, and the country is now embarking on a reconstruction campaign, which we estimate will boost demand for stainless steel from about the 4th quarter. Europe has traditionally been a vast consumer of ferrochrome in order to support its stainless steel industry. What began as concern over Greece's ability to service its debt rapidly escalated into a crisis of confidence about the viability of the European common currency and the longer-term solvency of its southern constituents. In aggregate, Europe is less indebted than the US and enjoys a higher savings rate, though it suffers from structural rigidities that hamper economic revival. In order to grow its way out of indebtedness, it is imperative that the US boosts its tax revenues, but the rigidities in the labour market, coupled with unfavourable demographics, make this extremely challenging. Banks throughout Euroland have significant exposure to Iberia and Greece. The chart on the right shows that collectively European asset management managers and sovereign wealth funds in core Europe have around 593 billion euros worth of exposure to big debt. However, we are justifiably concerned over the health of the European banking system, which only very recently emerged from the US-originated mortgage banking crisis. The euro's weakness should boost exports in more competitive countries such as France and Germany, though it renders vital commodities more expensive. However, with substantial surplus production capacity in Europe, this should not prove an imminent inflationary threat. While European exports may offer some reprieve, we do not expect it to be able to offset the decline in domestic demand for stainless steel goods. Thus, we forecast weaker stainless steel demand for this year. We expect stainless steel makers will use this decline in demand as well as weaker euro outlook in order to negotiate lower prices for ferrochrome. This slide, I've just tried to summarize the economic factor and the impact on the ferrochrome and stainless steel markets. In this part of the presentation, we consider recent ferrochrome trends. Approximately 80% of all chrome ore produced is consumed by the stainless steel industry. Thus, the success of the ferrochrome market is inextricably linked to the fortunes of stainless steel. Therefore, in order to derive the level of ferrochrome demand, we use the relationship that approximately 1 ton of high-carbon ferrochrome produces 4.2 tons of stainless steel. We then estimate the stainless steel production level, adjusting for stainless steel produced from scrap. The Wuxi market is seen as a proxy for Chinese stainless steel inventory levels and a lead factor in assessing the Chinese ferrochrome demand. The higher the stainless steel inventory, the lower the demand for ferrochrome. During the second quarter, Wuxi inventory levels rose 2% compared to the first quarter. Following this growth, we anticipate that the second half of the year will be characterized by destocking and a subsequent decline in Chinese ferrochrome demand. The destocking phenomenon is expected as a result of a number of factors, including, number 1, the low stainless steel prices, 2, the lower global ferrochrome production, 3, the ban of Zimbabwean chrome ore and the threat of a ban of the Indian chrome ore, 4, higher Chinese electricity tariffs. These factors should result in lower Chinese ferrochrome, with producers preferring to make use of the existing ferrochrome and stainless steel stocks. European ferrochrome demand declined by 7.8% from the first quarter and looks to continue this downward trend for the rest of the year. This should see traders liquidating their ferrochrome positions and reduce their ferrochrome stock levels in the short term. In America, demand for ferrochrome improved by 4.3% in the second quarter compared to that of the first quarter. This, however, could be attributed to restocking by stainless steel mills. We understand that American mills have around 3 months of supply of inventory, which will be marginal. Overall, we expect stainless steel production for the third quarter and the year to be around 7.7 million tonnes and 29.5 million tonnes respectively. The subsequent demand in ferrochrome is estimated at 1.9 million tonnes for the third quarter and 8.3 million for the year. Turning our attention to ferrochrome production, the second quarter production level remains largely unchanged, resulting in a surplus of 47,000 tonnes for the quarter. Looking ahead at the third quarter, on average, South African producers will be operating at 65% of their capacity. This is typical for third quarter production as we move into winter tariffs, resulting in most producers preferring to limit their production and undergo scheduled maintenance. The exceptions are IFM, who guided the market that they intend to produce between 27 and 31,000 tonnes, and Tata Steel Richards Bay, who indicated that they would be closing until the 1st of September. We estimate third quarter South African production will decline by 18% to to 735,000 tonnes compared to that of the second quarter. South African producers are not alone in their plans to cut production. Eskom will be reducing production at Vargon owing to high ferrochrome stockpiles, and it indicated that the Vargon smelter will remain operating at 50% until November. In total, the company will target production of 150,000 tonnes for the year. Therefore, we anticipate a decline in Western Europe production by 13% year-on-year for the third quarter. In Asia, Chinese chrome ore inventory levels increased 39% over the period, reflecting lower ferrochrome production levels. Overall, ferrochrome production declined by 18,000 tonnes, and we expect further reductions in the third quarter. The reasons for this could be attributed to China's recent power shortages, which is expected to limit third quarter production to 460,000 tonnes, a decline of 9% from the second quarter. Many people have asked me whether the recent Zimbabwean ban will limit Chinese production this year. Without detracting from Edmar's speech, I would say that in the absence of large stockpiles of chrome ore, this would indeed limit Chinese ferrochrome production by an estimated 160,000 tonnes. Though in lieu of the chrome ore stockpiles, we do not believe that the Zimbabwean chrome ore ban will impact Chinese production this year. Indian ferrochrome production has shown a slight improvement. In an interview with the Indian Ferroalloys Producers Association, it was indicated to us that India is on track to produce around 900,000 tonnes of ferrochrome for this year. We forecast that third quarter Indian production will be around 215,000 tonnes, bringing the total Asian production to 735,000 tonnes for the quarter. We look at prices. Ferrochrome European benchmark price negotiations ended at 135 cents per pound in the second quarter, 5 cents higher than the previous quarter. This increase in ferrochrome price was driven by a number of factors, including a higher scrap price in the first quarter of $500 per tonne compared to $415 per tonne in the final quarter last year. This resulted in many stainless steel makers increasing their demand for ferrochrome. Secondly, a higher production costs, particularly in South Africa, that necessitated that producers be compensated by higher prices. And lastly, a tight market. Despite the fact that the first quarter ended with a surplus of 38,000 tonnes, in February the market was in deficit, causing the European price to spike to 133 cents per pound during this period. These factors all culminated in a higher second quarter European benchmark, though we anticipate that the third quarter benchmark will see lower prices of 124 to 125 cents per pound.